Fried Maxick are people who have done our audit for 21-22, and they will be presenting to us this evening the results of that audit. So welcome, and I'll turn it over to you.
Thank you for having me. I'm Nicole Ryan. I'm the principal of Fried Maxick. I believe I spoke with all of you last year. I don't think there have been any changes. It's nice to see you all in person and not through a screen. That's always took that for granted before, but I really appreciate it now. We did conduct the audit under generally accepted auditing standards for the year ending May 31st, 2021. I'm happy to say we were able to issue modified opinions. So that's over your governmental activities, business type activities, each major fund, and the aggregate non-major fund information. So an unmodified opinion is essentially a positive opinion saying that based on our audit, we did not identify any material misstatements. Yes. Absolutely.
She's on good stuff. Good job.
Always a pleasure to work with the ladies. They did a great job, as always. There were no new standards that required implementation this year. So from that perspective, finally a year we didn't have to add 10 pages to your financial statements of more note disclosures. more happy reading. Moving on though, I'll go on to pages 3 and 4 if you have the statements in front of you. I'm not sure if some of you do. Otherwise I can just talk about them overall. These were your government-wide financial statements. So on your government-wide financial statements, that includes the governmental and business type activities. So that'll have the capital assets and long-term liabilities that you don't typically see if you were to request the internal reports or review the internal reports on a daily basis for the village. At the end of 2021, your capital assets for your governmental activities totaled $5.7 million. And for your business type activities, they totaled $1.6 million. Your long-term liabilities totaled $3.5 million for governmental and $2.16 million for business type. Your long-term liabilities would include your serial bonds payable, you had new installment purchase debt last year, compensated absences, post-employment benefits, as well as the net pension liability with the retirement system. So all of those liabilities that you don't see as a liability on your typical internal reports are presented on these financial statements. The largest of those liabilities for the village is the post-employment benefit liability. It totaled $4.35 million at the end of 2021, which is actually a decrease from 2020. That was at $4.75 million. The liability is basically out of the village's control as far as value because it's determined based on an actuarial valuation and the retirement benefits that the village has continued to offer. The other big change for the positive was the net pension liability. So your pension liability with the retirement system gets valued each year on March 31st. So it'll be coming up again. Last year, for 21, we saw a significant drop in your proportionate share of that liability, going from $1.15 million to $4,000. And the reason for that large drop is because in 2020, March 31st was the very beginning of COVID, and so the stock markets did not like it, so any investments in the retirement system were down. So the retirement system was at about 86.4% funded in 2020. In 2021, with the large turnaround financially, we saw that go up quite a bit to the point where the plan was actually 99.95% funded, which is phenomenal compared to most of the country for retirement system plans. So that was terrific to see. So your proportionate share obviously went significantly down because the plan's liability overall went down. Any questions on that? At the end of the year, the governmental and business type activities did have a deficit unrestricted net position, but that's largely associated because you have that large post-employment benefit liability. So that's a direct impact of that. The hard thing with the post-employment benefit liability is New York State doesn't provide any funding mechanism for you. You can't, you're not legally allowed to put that money into a trust to offset the future costs of that liability. So you're required under the GASB statements to report that liability, but you can't set aside any funds. So when it comes to those statements, it's a little lopsided for that purpose. Moving on to the fund basis financial statement, the general fund had a total fund balance at the end of the year of $2.2 million. Of that, $509,000 is considered non-spendable, and that was related to the general fund liability that the sewer fund had to owe the general fund at the end of the year. The remaining fund balance consisted of $372,000 that was set aside for capital and debt purposes. It's restricted. Yes.
Page 5.
$453,000 was an assigned fund balance for the portion that you appropriated for the fiscal year 22 budget, as well as any encumbrances. And that left $832,000 in your unassigned fund balance at the end of last year. Your revenues exceeded expenditures by $438,000 in 21. A large portion of that was your sales tax revenues last year. We're up about $181,000 from 2020. Another portion of that was the federal and state aid was up approximately $113,000. CHIPS was up from 2020. And you also had a CDBG that had been the Community Development Block Grant that was received in that year. We did present the budgetary comparison schedule as required supplementary information. That will be on page 35. And the actual expenditures in the general fund last year remained under the total budgeted appropriation by $918,000. The non-major funds, as we call them, are your capital projects and the Parks and Recreation Fund. Your capital projects had basically one piece of activity, and that related to how we're required to present your installment purchase debt. So the wheel loader, the capital lease essentially that you entered into 21, it's shown in the capital projects fund. It's basically an in and an out. And the Parks and Rec Fund was up to $190,000 for restricted fund balance at the end of the year, which is an increase of about $40,000 because there were no expenditures in that fund. So as that'll continue to build since it was unused. Onto the sewer fund. So I'm going to do this in two separate ways, and I believe I did it for you last year too. The first way will be as a business type activity, which is how we're required to present in your financial statements, and then I'll go over a couple figures for you based on how it's presented internally, so when you're thinking about for budget purposes. The total deficit in that position was $873,000 for the sewer fund at the end of the year, with an unrestricted deficit of $1.6 million. So that would factor in any post-employment benefit liability as such. The overall net position, though, did increase $134,000. So your revenues exceeded your expenditures. There was an operating loss, though. So when you compare your actual operating activities of that fund of $85,000 versus the operating loss of $55,000 in the previous year. The primary reasons for that was salaries and benefits were up $70,000. Contractual was down $13,000. And the offset, which is really your charges for services that you have in there, had increased only $30,000. So that's why you sort of net out in that direction. On page 10 was the cash flow statement, which is presented and shows the overall net increase in cash for the sewer fund of $232,000 for the year. That's an improvement over 2020, which had a decrease of $12,000. So a step in the right direction cash-wise, for sure. The biggest concern, I would say, for the sewer fund is the same thing we've been talking about, and that's that $500,000 that's owed between the sewer and the general fund. As far as the sewer fund and how it's presented internally, the sewer fund had a deficit fund balance of $139,000 at the end of last year, but that was compared to a deficit of $315,000 the year before. Revenues exceeded expenditures by $176,000 at the end of '21. But I will caution you that a portion of that 176 was $67,000 related to one-time federal aid. So you kind of want to take that out when you factor how well it did that year. So it's moving in the right direction, which is all you can try to do to get it back where you want it to be. Any questions on the sewer fund? Excuse me. The management report that we provided, it's called the report to the board. In there, we have required communications, which essentially summarizes our responsibilities over the audit. If there was any new statements that were required to be implemented, we noted it. On pages 3 and 4 in there, we identified significant estimates. So this is, it's something that people tend to gloss over because it's just a bunch of verbiage, but it's important when you're trying to look at your financial statements and understand what's actual numbers, actual figures versus what's just been estimated. So it's a good idea to take a look at that list just so you have that general understanding. Page 5 of the management report provides the summary of audit adjustments. So those were the adjustments that we identified during the audit and reported on your behalf for your financial statements. We also provided the GASB statements that will be coming up in the next few years. So those are important for the village to start reviewing for potential implementation, see if it even applies to the village. We tried to narrow it down a little bit for you and select ones that were of higher potential of being applicable to the village. In Exhibit A of the management report, that's where we identify the higher level deficiencies that we need to bring to your attention. The first one is the material weakness that's associated with the sewer fund, which we've basically covered already. It's similar to last year. Basically, the figures are updated from last year's numbers, so no real change there other than continuing to try to address that issue. And then we also noted a control deficiency because of improper use of reserve funds. So the debt reserve was applied to certain debt payments, and we picked up on it during the audit and discussions with Marcia and identified that you can't just use that for just any debt payments. It has to be the debt that was initially issued and the excess proceeds that it relates to. So we were able to remedy that for the financial statements, so it's not misstated or anything in the financial statements. And then just continue as you go forward to just make sure you have the proper approvals and resolutions so that you ensure that the excess proceeds are applied to the proper debt. And finally, Exhibit B is primarily the representation letter that includes the audit process that's been signed by management. That is pretty much everything for this year's audit. It was a pleasure working with the village all these years, and we really, really appreciate being able to service all of you and hopefully benefiting the village. You know, it's one of those things. You can do audits for private companies. There's a different emotional benefit, I think, to doing it for governments because it's more of an invested. We're not just doing it for you, we're doing it for your residents and allowing you that transparency, and I commend you for continuing to have an audit because not all villages do. And I do believe it's an important thing to have. So,
absolutely.
You know, on behalf of Laura and myself and our firm, I really do appreciate that you allowed us to service the village all of these years.
Oh, we're gonna miss you. I really, thanks for all your service, really.
Thank you for allowing us.
And I appreciate the years that you guys have been working with us and for the effort, and it's been a great working relationship, so thank you.
And if anything does arise, we are still available for consulting purposes, phone calls, you know, if something does come up that you want other services, we can always discuss to see if it'll be something that we can assist with. So don't hesitate to reach out.
All right.
Thank you.
Thank you.
You too. Take care. Enjoy the budget.
Thank you.
Fun time of year. Oh.
Okay, at this point, again, we thank you, Nicole.